Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 4th of February. I'm Daniel Lam, your host for the podcast. The sharp unwind in silver and gold was a typical case of trend-following buying meeting an abrupt end. Short US dollar covering is ongoing, while speculative positioning in precious and industrial metals has yet to fully reset. Now, the retail buying in silver at the start of the year led to rising prices, pulling in even more demand. This may have left flows highly one-sided and vulnerable once momentum stopped accelerating. Momentum CTAs have held onto and likely added to silver longs on the ride up. However, managed money had already started to fade the big silver rally in advance of Friday's corrective move lower. Short interest in silver futures rose to its highest level in 2 years. Similarly, out-the-money put activity in silver ETFs had been picking up notably amongst institutional investors. Together, this shows that some discretionary investors had begun to take the other side of the bullish retail and momentum flows. Now, once the silver bubble burst, it is clear that mechanical flows like leverage ETF rebalancing accelerated the sell-off at the end of last week. CTAs then likely added to the negative feedback loop in both silver and gold as downside momentum took hold. Now, the sell-off in silver and gold also spilled over across FX and global stock markets, especially in the non-US equity indices. There has been CTA deleveraging, and it is quite pronounced in EM and European equity indices. But the CTA exposure in some indices, such as Europe, Korea, and Brazil, remains well above neutral levels. So therefore, non-US equities stay more vulnerable to CTA supply in down moves versus US ones. In terms of currencies, CTAs still have scope to unwind US dollar shorts, with projected flows seeing a positive skew in a neutral to up market tape. A move towards 98.50 in DXY would be consistent with more neutral CTA positioning. The equivalent for euro dollar is a drop towards 1.16 to 1.17. So, how to make and what to make of the short-term noise? Well, we see short-term volatility as adding opportunities in our key investment areas, such as US equities and technology stocks, as well as adding to gold as diversifiers. The medium to longer-term fundamental stories, such as AI and central bank diversification, stay intact. Investors should have a more foundation-like approach, looking beyond the noises and invest for the longer term. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.